What is up, everybody? Welcome to the Russell Journal. My name is Russell, and this is my journal entry for today, October 26th, Wednesday, 2022. This guy over here is me, Russell, and it is my dream to be a professional day trader. In order to be a professional day trader, I am starting out with a balance of $516. Now, in order to be considered a professional day trader, I need to make a salary. I get paid. Professional people, you're professional once you get paid. In order to be a professional trader, I need a salary. The average American salary is $28,000 a year. That means in order for me to make this a viable profession, I need to hit at least $28,000 a year. Now, every year there are 252 trading days. That means for all 252 trading days, in order to hit just that $28,000 a year, I will need to make $100 a day trading. So we'll see how it goes. Go ahead and we'll pull up the chart behind me and we will talk about what happened to me as far as my trading goes today, and we will talk about what happened in the market and what we're going to plan on for tomorrow. And we're waiting. So basically what has happened in these markets is that we got... so basically what's happened in these markets is that we had... You can see, there we go, we have the chart behind me. All right, so you can see from behind me that we've been on basically a rise up in the market. It has been coming up. And a lot of this is a couple of things. One, you're just really, really oversold. Down here, obviously, things were really, really cheap. The second thing that started to step into play here was the idea of a Fed pivot. And more than anything, it's not so much a pivot that really drives a lot of what's going on in here, so much as it is that the Fed is going to start slowing down, right? You've already been through like three, going on four interest rate hikes. And at that point, you're getting to this place where the cost of money is going to stabilize. With the cost of money stabilizing, you're looking at investors who can start to average based on what their cost of the money is versus what they can invest. So the whole thing is like not so much exactly just a Fed pivot, but a stabilization of interest rates, okay? That's going to allow investors to make good decisions while money is cheap, right? Or while money is stable, right? They can balance their portfolios based on that. Then you get coming in from last week into this week, you begin to see, you get the real pushes up here and the rises up into earnings. And the big reason this is because this is tech earnings week. You have Microsoft and Google report earnings last night. You had Meta report earnings also as well. And then going in tomorrow, you get Amazon reporting earnings. Now, these are the big guys, the big kahunas. These guys, they move the markets. These guys that you're looking at the companies that are worth nearly, a couple of them are $1 trillion companies, and others are, others are getting up there. So you had the big tech earnings reported, and again, it's a mixed bag. Okay, on one side you have them missing on earnings. You had Google miss on earnings, Microsoft beat on earnings. I didn't see what the numbers were for Facebook. I think it's a miss. Their stock was down at least $12 last time I checked. So what we know is that these earnings are a miss, and immediately they're kind of a disappointment. But they are bringing some stability to the market, because on one side, company is losing money or not making as much money, thus for making their stock less valuable. On the other side of that, you have them where they're also means that we're probably reaching that point of peak inflation, which means you're probably reaching that point of peak interest rate hikes, okay? So those things going into the market are lending themselves a little bit of support. You can see yesterday here we got up, let me come back, up to this upper Bollinger Band up here. You see that we got the pull back from that upper Bollinger Band. That band is expanding a little bit. And then today, into some of that earnings disappointment, you did get some more of a pullback. Now, ultimately, what is going to happen here? Well, there's probably going to be a push to make this continue to rise up until the 18-week moving average. You hit that, and you might even get up around $417, which will be which is the 18-month moving average. I don't have it on the chart for you today, but I will present it if it becomes really necessary. We'll go through that tomorrow, okay? So what are we looking for as far as plays here go? Well, tomorrow's the end of really big tech earnings. So if you were ever going to put on any sort of spread here, Amazon's earnings are definitely going to be a reason to want to straddle this market. I will definitely be trying to straddle later in the day tomorrow, going through the weekend, trying to pick up some of the losses. Now, as far as my account and how things went, if you watched yesterday's show, and I hope you did, if you missed it, please go back and check it out. It was an interesting show for me, and it's interesting to sort of start to really show you the story of what I'm trying to do with a small account, how hard it is to do that with a small account, and when things go wrong, really how hard it is to deal with things. I took a shellacking. My account is obviously down to $516 today. At the peak last week, it was up around $1,500. Hoping for the right move here, and if this thing, let me go over here. So if this right here, right, the slow stochastic, let me go right there. There it is. Sorry, trying to do this on a green screen is not easy. We come out of overbought here. We'll catch a move back down to this 18-day moving average. Catching that move will be pretty easy. So we're just going to be watching mostly tomorrow to see if that's going to set up a move back to the 18-day moving average. It absolutely should. Amazon, even if they have good earnings, is going to be somewhat ambiguous as far as things go. So I'm definitely looking to get short to ride that move down. I think that is where I'm going to probably pick up a lot of my losses. So that's the game plan, really. But I will be watching tomorrow. There'll probably be a lot of push-pull in the market, especially going into the day. There's probably a pretty good chance that with Amazon's earnings coming up, that we'll get a pretty good push up, and then somewhere in the rest of the day we'll get a sell-off, either after the market and after Amazon reports earnings, or before. So I'm going to look for a nice high spot in there tomorrow to get short, and I'm probably going to hold that short overnight into Friday, looking to capitalize on whatever volatility there is in that. So that is as far as I have things going. There are some other concerns going around the market right now. A little bit of stuff going on with Iran. There's a little bit of stuff going on with Iran, and there was some sort of attack, I believe, and stuff like that. So anyway, I don't really want to get into that. I'll do some more research on it and cover it tomorrow. Anyway, in the meantime, thanks for watching. Thanks for checking out the show. Go back and look at yesterday's video if you want to catch up on kind of where we are today. Until tomorrow, we'll see. Russell Journal is written, edited, and hosted by me, Russell Liss. We are produced by Social Media Shows. Our executive producer is Maria Pereza. Thank you, Maria. Thank you, Social Media Shows. Go check out Social Media Shows. And until tomorrow, I think I said some sort of catchphrase.